Hey everyone, welcome back to Corporate Decoder. Today, P.O.R just filed an 8K announcing its first quarter results, and I'm seeing a mixed bag in the numbers. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is letting us know about their latest financial performance and some upcoming events. This is a current report that companies file when major events happen. In this case, Portland General Electric is reporting its financial results for the first quarter of 2026 and giving us a heads up about an earnings call. The report is dated May 1, 2026, and the earliest event it covers is also May 1, 2026. This means the company is releasing its latest financial information concurrently with this filing. The company we're looking at today is Portland General Electric Company, a regulated electric utility. They operate in Oregon and are publicly traded on the New York Stock Exchange under the ticker symbol PORL. This section tells us that Portland General Electric issued a press release on May 1, 2026, announcing their financial results. This is where the core financial details of the quarter are revealed. The press release itself is included as an exhibit. This is usually where you find the headline numbers for the quarter, like revenue, profit, and earnings per S-HEF. Regulation FD, or fair disclosure, is all about making sure important information is shared with everyone at the same time. This part of the filing indicates that the company is also making a public announcement about an upcoming earnings call and webcast. They're also providing the slide presentation that will be used during their earnings call. These slides often offer a more visual and summarized look at the financial results and management's commentary. Now, let's dive into what these results might mean. Looking at the news headlines from around May 1st, it seems Portland General Electric P.O.R reported its first quarter 2026 results. Some reports indicate the company lagged earnings and revenue estimates, while others mention a drop in profit but reaffirming full-year guidance. This suggests a complex picture for the quarter. When a company reports results, we want to see how they performed compared to expectations and over time. For a regulated utility like Portland General Electric, predictable revenue streams are usually a hallmark. However, like any business, they can face challenges. For utilities, factors like weather, fuel costs, regulatory decisions, and infrastructure investments all play a big role in their financial health. A drop in profit, even if they reaffirm full-year guidance, warrants a closer look. It could mean higher operating costs, increased expenses for maintenance or upgrades, or a slowdown in customer demand for electricity. The fact that some sources say they reaffirmed full-year guidance is a positive sign. It implies that management believes the challenges seen in the first quarter are temporary or manageable, and that they still expect to meet their annual targets. This is crucial for investor confidence. Let's consider what a profit drop might mean in real terms. If we imagine a company making a certain profit, a drop means less money left over after covering all their expenses. For investors, this can mean less money available for dividends or reinvesting in the business. For Portland General Electric, this could impact their ability to fund essential grid upgrades or renewable energy projects, which are critical for their long-term strategy. Comparing these results to previous quarters and the same quarter last year would give us a clearer trend. Without those specific numbers from the filings exhibits, we're relying on the summary information and news reports. However, the general takeaway is that the first quarter appears to have been a bit of a struggle. But the company is signaling confidence for the rest of the year. For a regulated utility, stability is key. While they may not see explosive growth like tech companies, consistent performance is what investors typically seek. Any deviation from that expected stability, like a profit drop, tends to raise questions. This filing essentially confirms the release of their earnings and provides the supporting documents. The real story unfolds in the press release and the slide presentation. The market's reaction to these results will also tell us a lot about investor sentiment. The risk I am watching is whether the factors causing the profit drop in the first quarter will persist and impact their ability to meet those reaffirmed full-year projections. What I am actually looking for is a detailed breakdown of their operating expenses and any specific one-time charges that might have affected the profit margin. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, hit that like button and subscribe for more, and join our Discord community in the description.